Oh boy. Oh boy, oh boy. It's a big one. Market manipulation. A lot of people like to blame market manipulation for their losses or their lack of trading success. So today we'll have a look at what is market manipulation. I feel like a lot of people don't really understand what market manipulation is for traders. I put together a couple of quick presentation slides, so we'll have a look right now. Okay, so the intro. It's illegal to manipulate financial markets. Okay, this practice is heavily regulated by the SEC in the USA and governments. Manipulators have to find creative and legal ways to impose advantages over regular traders. So first of all, I think you should need to get it out of your head that the broker is selling your trade information, where your stop loss is, where your take profit is. It's not selling that information to anyone. If it did, it will be in really, really big trouble. And it's not really worth it to look at your trading just just to take that risk. So if manipulating that way is illegal, okay? So you don't need to worry that the market is specifically targeting your stop loss, targeting you, okay? So let's get that out of our head, okay? It is true there is manipulation, okay? We'll look at these ways, the ways, the real manipulation, okay? Who are the manipulators? Individuals or groups with significant funds, hedge funds, and banks, and market makers that provide the liquidity. Okay? Anyone with significant money or power can uh, manipulate the charts. In one of my videos, I made an example about how almost anyone, if you have $100,000 and you go on the 5-second chart, you can manipulate that chart. Okay? So here's some examples of manipulation. Fake breakout is a market manipulation. Pump and dump is a manipulation. Stop loss hunt is a manipulation, okay? Fake breakout. The intentional and temporary move of price beyond a key level to encourage traders to enter positions. I think we all know what a breakout is, right? You're looking at an important level, and if price is just going past that, it's probably a sign that it's going to keep going up, right? So that's a market manipulation. That's a trick where it just moves so you think it's going up, but it's really going down. Okay? So people that if trade breakouts, you have a couple of solutions. You could wait for a confirmation. Example, for a closure, pick a time frame, a reliable time frame where you can look at the candle closures above the key level for a confirmation to enter the trade, okay? Because the way the fake breakout tricks traders is that they don't wait for a confirmation. They see something that might point to one direction, and they jump on it, right? They use that as an excuse to say, yeah, the trade is valid. So if you don't have impatience or you don't think like that, you could wait for a confirmation, or don't trade breakout levels. Don't trade any important level like that. Like, just wait till price is way out of that level. Or if you're going to trade a breakout without waiting for confirmation, don't enter as soon as it breaks that line. Wait and see if it keeps going up a bit more, and then enter. So there's a couple of ways to go around this manipulation. So if you're a new trader, you're gonna get manipulated this way, okay? Pump and dump. Pump and dump, using a catalyst, a news event, or market structure to make it seem price is going one way. So pump and dump is like you see, let's say we want to buy it, price is going up, Price is really going up, okay? This is way there's a there's a there's a breakout, there's the closure, and it keeps on going, right? And now other emotions will come into play, like fear of missing out, or you already missed out on a lot of the move. Okay, so anger. So they're gonna pump the price and get you feeling that way. So you decide to enter the trade and enter big, just so they just crash the price, crash the chart, crash the market. So and not so they will do that, and they would pump the price on the chart, and also they would use like an event, like let's say you're trading the euro USD. I don't trade that pair, and there's great news about the dollar that just came out. Okay, in that case, you're probably going to think, okay, yeah, great news for the dollar, it's going to go up. So the big banks, the guys with the big money, they just use that event to induce traders and get more money, better prices. So why do they do that? It's because if their intention is to sell, right? What they're going to do is they're going to pump the price to get better prices. The higher they buy, the more profit they make when they sell. Okay? The higher the price goes up, the more money they're going to make on the way down. And the more they pump the price, the more liquidity, the more orders are going to come in for buys. So there's going to be a lot of stop losses, a lot of orders to eat, to take, so they could put on a lot of orders and make more money. They will put more orders because other traders are taking more buys. They're setting up for more sells. So they either use a news event or market structure. Like by the way, that happens to me. The market structure one happens to everyone here and then. Okay, where the market structure makes you think that price is going one way, and you do feel these emotions where you kind of feel like, oh, look at this big move, and I didn't participate. So that's a trick, but guess what, guys? Yeah, it's part of the game. It happens to everyone. Okay, even between the institutions. Institutions, institutional traders, they do get tricked this way. Okay, guys, just look at interviews of institutional traders. Okay, there is manipulation, but everyone is manipulated. It's the really market manipulation is the cost of doing business, of the cost of trading. Okay, everyone's going to fall victim to it. If you look at the interviews of institutional traders, they talk about emotional control, anger. They get stopped out of a trade by 1 pip too. Uh, they miss out on trades by 1 pip. They put on $1 million trade and they lose that trade by 1 pip. Okay, so what are you complaining about? Huh? So things that happen to you, spread problems and all of that, it happens to them too. Maybe on the spread problem on a different level, they have way better execution, but they see the same chart that you see, and they have the same like brain as you do. So another way, guys, stop loss hunt. This this is what I was trying to say when institutional traders get tricked. I'll explain again at the end of this point, okay? What is the stop loss hunt? The act of taking players out of a trade before the trade plays out. They stop you out before the trade plays out. Experienced traders just make educated guesses of where retail traders put their stop loss. Experienced traders make educated guesses of where retail traders put their stop loss. They don't know literally where your stop loss is. Okay? They make educated guesses. They have a lot of resources, they have a lot of computers, algorithms, softwares, money, staff to make these guesses to know where most new retail traders would place their stop loss, okay? They don't know where your stop loss is, they make educated guesses. It's not that hard if you're experienced traders, it's not that hard to know where most people put their stop loss. Or they will set up fake swings that impatient traders don't see on time. So the market is making new highs and new lows, right? A swing is a new high. So you see a setup, okay, a valid setup, no problem. You're gonna take that setup, but you might place the stop loss at the wrong point. You're gonna be so fast. You're gonna see a swing, but it's not a real swing. If you really look at the structure, you can see it's not a real swing. However, a lot of traders, they see the setup, they see that swing that looks like a swing. They're so excited to get in the trade, they just convince themselves that's the swing. That's where they have to put their stop loss under. A swing is also a new low. They put their stop loss under a new low, but it's not a new low if you look closely. The new low is right before. So they're so impatient they just put their stop loss under there. But if you but it's so obvious. But if you just take an extra minute in your mind, just think that, oh wait, by the way, I have to remember that to not place my stop loss at an obvious level. Just think like that, and you see so fast. You see the real swing, the real place where you have to put your stop loss. So that's another way they trick you. They put these swings. They're not actually swings if you really look at the chart. Maybe you don't see it if you have a bunch of indicators on your chart. Okay? So so institutional traders, they also get stopped out before the trade plays out. Other traders, they make guesses on where other traders put their stop loss. Okay? So this happens to them too. So some things I can say about this, guys. When you trade, you're not trying to be right or wrong about the market, okay? So think when you're making a strategy, maybe think about, don't worry about the trend. Like maybe a strategy is not based on a trend. It's not based on being right or wrong about what will happen in the market. Like these are just ideas of ways that you could avoid market manipulation. And if you're not a greedy trader, this won't happen to you too often, okay? Manipulation happens to everyone, but more often than to some than to others. Okay? Okay, guys, market manipulation is a crazy one. Okay. Slippage occurs occurs because of dark pools and gaps. I'm going to talk about the dark pools on the next slide. So occurs because of dark pools and gaps, or when there isn't enough liquidity or orders at your requested price. Another common reason for slippage is time delay between your network and the broker server. A lot of people get angry about slippage, okay? Oh, by the way, another common reason for slippage is if you trade on the lower time frames. I'm not a victim to slippage because I don't take market orders. I take limit orders, pending orders, and because I trade on a time frame minimum 1 hour. There's not really slippage on the 1 hour time frame or higher. The slippage happens if you take entries on the 5 minute, 1 minute, 10 minute, 15 minute, you'd get slippage. Okay, that's another reason. So this is part of the game. If you're trading on the lower time frames, that's something you need to expect because there's not many orders at small specific prices, right? People, real traders who are moving the market, they move a lot of money, so they look at bigger time frames and they don't look at specific prices. So there's probably not orders at that price. So you need to stop getting angry about things like that, okay? Like don't blame market manipulation, okay? Think about what you do. Maybe accept it if you want to trade on the lower time frames. Look for a different broker with better spread or slippage for lower time frame traders. Okay, so there's a couple of ways about this, but don't think that slippage is a targeted market manipulation with bad intention, unethical intentions. No, it's not like the market thinks to take in this trade. It's going to execute a trade at a different price, so you make less money and they make money off of that. No, okay? They don't take those kind of risks. It's highly illegal, okay? So, spread changes is kind of related to slippage. Brokers, they don't target your specific account. It's part of the game. And the spread change would work sometimes in your favor and sometimes not, depending on the liquidity, news events, number of orders at the time of trade. If you're entering trades at the New York Open, spread is going to be high because there's a lot of people taking trades at that time, right? So, and also spread sometimes is going to work in your favor. If you might be taking a trade at a really good time, but you don't know. There's so many factors, right, that are controlled by algorithms, and you don't really know, but sometimes it's going to work in your favor. So again, spread changes, you could also work with a broker or prop firm that suits your personality needs. Again, spread, it doesn't really affect me because I trade on the higher time frames. Okay? And guys, another thing that I want to say, okay? It can also be a manipulation. The lower the spread, the more manipulated that market is, okay? Low spread can also mean low barrier to entry, more people to trick. When I see like EU so low spread, right? I I actually, my strategy doesn't really work that well on EU. It works, but there's way too many fake outs, and maybe that's why it's way too manipulated because the spread is so low. That's where people go to. I like the ones with high spreads, guys. I don't go into crazy exotics, but like NZD CAD is like 20, 20 spread. Yeah. EU is 1 or 2. NC is 20 spread, but my win rate on NC is what, 80%? So, but I don't get that many setups on MC, but still a high win rate, right? So low spread can also be a manipulation, right? Inducing more people to enter. So I'm not, if I see low spread, that doesn't, if I see a pair with low spread, that doesn't make me think, oh, I need to check that out. I'm actually cautious with low spread. Something to think about, okay? Guys, the next one, I'm not even going to talk about it in this video because there's a lot of videos about it that I'm going to make, and I already have: emotional wreckage and psychological warfare. Some examples of how the market intentionally does this to you is it makes you miss a trade by 1 pip or stops you out of a trade by 1 pip to induce emotional decision making. I told you what happens too to institutional traders. They just don't get induced to make the emotional decisions. Okay? So I'm not going to talk about this too much here, but it's a big one. Okay? Realize that realize that this is the real trick. It's not a technical trick. The trick that the market is trying to play on you is emotional. Those are the tricks, okay? I talked about some of the other tricks like stop loss hunt, pump and dump, breakout. These are all tricks to make you emotional, okay? Make you make more make you make emotional decisions. You're going to get angry, make the wrong decisions in your trading, okay? So realize it's a trick, and if you realize it's a trick, why do you get angry? If you get angry, you're not understanding what I'm saying. If I'm telling you the trick and you get tricked, how can you get angry? If you know it's a trick, why would you take trades that you're going to regret? You're not understanding me when I say it's a trick. I've watched trader videos. They don't understand this. That's the trick. Why are you getting angry? Guys, if I miss a trade by 1 pip, it's hard, but I'm supposed to get excited, right? You're supposed to be happy. I don't get angry if I miss a trade by 1 pip. Like maybe for a couple of minutes, that's normal, right? But I don't make emotional decisions after that. I explained that in in one of the previous videos too. Realize that the tricks are to make you make emotional decisions on the chart. The trick is not to like take you out trades by 1 pip or make you miss trades by 1 pip. That happens to everyone. Okay, that's part of the trick. The tricks are emotional. Okay, moving on. Oh boy, oh boy. Dark pools and spoofing. Guys, don't worry. I think this is the last slide. I have another slide with some final points, but this is the last like manipulation point. Okay. By the way, this is not financial advice. Do your own research and diligence. Dark pools. Okay. By the way, don't blame this for your lack of trading success. We know that everything I'm saying is part of the cost of doing business, part of the game. Okay. Dark pools. Pools are private and legal platforms for investors with a lot of money to execute and close trades before their positions appear on the live market. It's legal. The government does keep a close eye on it. It's a tricky one, right? It's a tricky one. But what I can say is that it's not that hard to avoid brokers that don't have charts that show late execution. Okay, that's number one. It's you can find probably on your broker it doesn't happen that often, but if you see gaps, like especially on the lower time frames, this is probably why, or slippage, like I mentioned earlier, actually. Okay, maybe there was an order and you didn't see that order. Okay, the execution happened after. That dark pools are legal. Okay, but it's not so bad. Again, if you trade on the lower time frames, guys, you have so many things to think about. I don't, guys, all of these things that I talked about, I don't worry about them on the 1 hour and higher. So too hard to manipulate. Even the breakouts, even the 1 pip loss, that's hard to manipulate on the higher time frames. So guys, if you're trading on a 5 minute, you're gonna see a lot of gaps on the 1 minute. That's dark pools, right? Big gaps. That's dark pools. They know, guys. Avoid trading on the lower time frames. It's a tricky. There's too many factors that you have to keep in mind, and then it's going to be hard to understand why your strategy is not working. You might blame something else. I just think that it's tricky to trade anything under the 1 hour, even the 15 minute, maybe the 15 minute, but the 5 minute or the 1 minute, no way, no way, guys. So dark pools is something that maybe you would want to look at more if you trade on the lower time frames. But another thing you can do to avoid um, being a victim to dark pool manipulation is, by the way, it's manipulation, but in the way that they just don't want people to see their orders or positions until after the trade. It's not manipulating the retail trader in that sense. So maybe consider avoiding market orders as a solution. I take pending orders. So I get it executed at my price, specific price. Okay, so it's on a higher time frame, so I will get the price. I don't put 1.650893. That's not my price. My price is like 1.693000. So I'll get filled. So if you avoid market orders, you could avoid slippage, dark pools, manipulation. Pick a transparent broker. Okay, just do research and pick a right broker. Look at Trustpilot. Look at the broker and look at the latest reviews and see if there's more complaints than good reviews. Okay, spoofing is related to people that trade volume, look at really at volume, or they look at upcoming orders in a market. They look at, oh, there's a big pending order. That might mean somebody's going to come in soon to that market. So spoofing is placing a large pending order and canceling it after price moves in the intended direction. So if you see a big buy pending order, but then price is going down, they want it to go down. They made you think it's going up, so you buy. But as soon as price is going down, they delete that pending buy order. So people that trade like volume indicators, and by the way, about volume indicators, I don't believe in them, and very simple explanation as to why. And this is just my advice, but think about it, okay? You're gonna see volume indicator tells you there's a big green volume, okay? First one, that's your indicator, that's your sign to buy. Guys, what if that's just a pullback? It's probably just a pullback, right? Think about that, guys. It's something that I don't think volume indicator traders think about. Probably that's just a pullback. So spoofing is placing a large order a large order and canceling it, or placing multiple orders at different levels to create the appearance of significant activity. Layering. Create the appearance, okay? It's not actual orders. They're going to cancel them. That is market manipulation, okay? But I can't also comment too much on this because I don't trade volume. I don't trade volume indicators. So I did give my advice on that, but I am not in a position to talk about this too much, okay? By the way, indicators can work if you know how to use them. They can work, okay? I'm not hating. So, final point. If manipulators break rules, they are in big trouble. It's not worth it, especially for our accounts, okay? They're not going to break their rules for anything under $1 million or something like that, right? They're not going to. They don't track your specific trading details, okay? So they manipulate, okay? Yes, but not illegally. So not in ways that you might think. Okay, it's not a personal attack on you. That's another thing you have to think about. If you take a loss, don't take it personal, okay? Market manipulation is the cost of doing business for retail traders and for institutional traders. Just on a different level, but it happens to them too. Definitely. Check it out, okay? Accept it. Don't blame it for your mistakes, right? It's easy if you make a loss and say it was the market manipulation fault, and then you're not going to look at the real problem. Maybe it's a technical problem or emotional problem. You're not going to develop that awareness or find a real solution if you keep putting the blame somewhere else, okay? And there you go. I just gave you a great tip. Market manipulation can be avoided under time frames over 1 hour. I do still get stopped out by a pick or two, but very rarely. And market manipulation, I don't get like these kind of emotional angers that happen from the points I mentioned today, because I trade on the higher time frames, and it's really hard to manipulate those time frames. You need millions and millions and millions of dollars of position size to manipulate the higher time frame. We can all win trades, figure out how to minimize losses, or finish with more funds than what you started with. We all lose. Even institutional traders, they lose, and they lose often. Many of them have like a 50-60% win rate, okay? Everyone. Don't have pending orders during spread hour. Guys, don't have pending orders during spread hour, okay? You're gonna lose a lot of money this way, okay? Get very angry. Spread hour, okay. Guys, I'm going to tell you something I do. This is not financial advice. Oh, and if you're trading on a lower time frame, the spread hour, if you have a trade open during the spread hour, probably going to get stopped out, man. But me in spread hour, if I have a trade open and I'm in drawdown for that trade, I remove my stop loss, okay, for that spread hour. Because spread hour price will fluctuate like crazy everywhere, but it's just spread hour, okay? It's just like rollover hour. It doesn't count. That action that happens, it doesn't really count in spread hour. So price can go down, way down in my drawdown, way past my stop loss during spread hour. But after spread hour, it's probably going to come back, okay? Only once, only once, only once. And I do this all the time. Every week. Every time I trade, I do this. Only once did after the spread hour, price didn't come back up. I lost more, so I closed the trade manually, but I lost more, but not that much more, like a bit. Instead of losing 1 R, I lost 1.3 R. So it wasn't that bad. So I'm not gonna, this is delicate advice. I'm just telling you what I do. This is not advice. I am not giving advice. Okay? I'm telling you what I do. So another reason you might be getting stupid losses is if you have your stop loss on during spread hour and you're in drawdown. If you're in profit or break even, if your stop loss is at least 15, 20 pips, it shouldn't be worry. But if you're close by 15 or 20 pips to your stop loss during spread hour, I take my stop loss off. Okay. and I don't have pending orders. After spread hour, I cancel my orders pending before spread hour. I cancel them, and I put them back after spread hour. By the way, this is all very fast. If you know how to trade, this happens very fast. Review your broker on Trustpilot. I mentioned this earlier, and stay up to date with the industry. Don't let anyone tell you what makes a swing, what makes a trend, or what makes a pattern. Look at the chart and find your own way. That's advice. That's my advice. That's advice that I took. That's advice that worked for me. And I could talk about this more in another video about why you shouldn't let someone else tell you what makes a trend, or pick someone else. Let someone else tell you what strategy is the right one. So I'll talk about this in another video coming up. So guys, I hope that was some informative and valuable. This was kind of long. I'm sorry about that, but I think it was a big one, right? Market manipulation. I hope it helped you for your trading journey and success. And thank you so much for your time, okay? Have a great day.